Hi friends, good afternoon. Welcome back to my channel. And today we'll analyze the CDSL share, the stock performance, and fundamentally from the point of view of fundamental and technical view, we'll just review this and share information, and then basis that basis the last performance of the company, quarter on quarter basis and year on year basis, what is the profitability company has actually given to the investors, and then what is the return on the share dividend, and then what is a company or technical chart is talking about, where will be this stock after 2 years or 3 years. In the long term view, we'll just take it on it. So my entire the presentation which I prepare, it's only on the long term point of view. We are trying to give you the couple of stock which will become a multi-bagger stock in future, so people can happily invest after doing their own research in this. But this is whatever we express in this presentation or video, it's our personal view. So without further delay, we'll just move to the stock analysis. Yeah, we are going to discuss these areas like introduction, what is the company in this, in which sector in industry the company is working, and then what are the key highlights of the financials, and the financial fundamental analysis, what are the important key ratios where the company, with the help of that key ratios and all those things, we can be able to analyze the company health. And then technical analysis, what is our chart, and what is final conclusion on this entire analysis, entire presentation. At one go we can able to give you complete snapshot of the view of the stock for the next 2 to 3 years. Coming to introduction part, CDSL is one of India's leading security depositories, which is initially promoted by the BSC Limited, which thereafter divested its stake to leading banks, leading banks. Now they have come in. The company has started its operation from 1999, financial year 1999. And what is the meaning of the depository services? What is that actual business? The meaning of the depository services is that any organization which holds investor security in electronic form, which means that today we invest on day-to-day basis, we invest in long-term basis, short-term basis into the stock market. So we invest through a broker. The broker is only facilitate to purchase or sell the transactions, and whatever the securities shares we buy from the on the name of the company, that will in the dematerialized form will be held by the a deposit. So in India, two depository companies are there. One is NSDL and CDSL. So CDSL is almost captured the 90% of its business in India in the depository services. So this is a brief introduction about the main business of the CDSL company. So you just can imagine now the India's population, like 3 to 4% which trade into the stock market, which invest in the stock market. We have 135 140 crores population, right? So if future में the population interest, if the people start investing into the stock market, then definitely this percentage will go up, and ultimately the beneficiary of this is only the CDSL and NSDL. The ultimate beneficiary will be CDSL and NSDL. Coming to the number of investors in India, this is a brief journey of this company, which commenced its business in FY 1999, and then a launch is like ESI and easiest way of the services in 2002 to 2004, and then the way it started its business. Now in 2022, the first depositor to cross the milestone of 7 crores demat account. Can you imagine that? Just 7 crores demat accounts, which is a 90% of its Indian demat accounts. So if you look at the statistics below, USA, in USA, 55% of its population is investing in the stock market. They trade in the stock market. So what is the total US population? It would be around 45 to 50 crores approximately. Out of that, 55% means almost like 20 to 25 crores people are they are dealing day to day in a stock market. In UK it is 33%, China is 13%, India it is 3%, where our population is almost like 130 to 135 crores between that. So it's only just 3% people who are actually dealing in the stock market. If the percentage of people increase, starting and dealing in the stock market, then The only beneficiary or ultimate beneficiary will be the CDSL, whose revenue will definitely grow, and ultimately it will have the impact on the profitability. Right. And then when the profitability grows, obviously the stock performance will definitely grow. Yeah. Coming to a key financial highlights, like the total operations, total revenue of the company, operational income for the FY 21-22, it's like a major chunk of the revenue is coming from the transaction charges. People who invest in the stock market, they know what is the transaction charges. So the transaction charges are the charges which is levied by the stockbroker for the for doing the transactions. That is one of the major source of revenue for this company. And then other, like if the any companies which comes for the corporate, any company which plans to commence its IPO, then that company needs to pay charges again here. The IPO charges, annual issuer charges, and online data charges. So almost like these are the this main sources streams. These are the main stream of incomes which through which the company is generating revenue. So if you look at this, FI 22 and 21, FI 2021, in FI 2021, for revenue increase compared to FY 21 and 22. So online data charges revenue has been increased by 113%. So previously, compared to previous year, previous financial year 2021 versus 21-22, the total revenue in online data charges has been increased by 113%. You can see that the amount of growth in this particular year. And IPO corporate action charges almost 84% of the revenue increase. Even if you can see that in FY 21-22, what is the like there are lot many companies who came for the IPOs, and those effects of IPOs are you can see in the revenue of this company. And almost like, if I'm not wrong, somewhere around 1,15,000 crores worth of money raised from the stock market through the IPOs. See the impact of that IPOs. And transaction charges has been increased by 67%. And annual issuer charges increased by 34%. So the basically, if you can look at that, any stream of revenue which has grown, it's all over and about 30%. You can see the increase in revenue of the company, which is almost starting from itself 34%, which is again a very good sign from the revenue increasing point of view. So if you can look at the previous financial years, just on any company's performance, we need to at least look at for the last 3 years or 5 years. Then only we can understand the trend of the company in which total income, which includes like operational revenue and other income. So it has been grown from 225 crores to 605 crores. You can see in 5 years, this company has doubled its tripled its revenue. In FY 17-18, the company has total income of 225 crores, whereas in FY 21 and 22, just a recent last year, it has grown to 605 crores. It's almost triple the its revenue. That's a huge number, the growth you can see in the financial numbers. When it comes to the profitability, from 103 to 311 in 5 years. So it's almost again tripled year. 300% the company's profitability has been increased in a span of 5 years. Don't forget that in COVID, we have faced the COVID in 1920, 2021. Despite that, during the COVID, we have seen a very big bullish rally in the stock market. You can see the net profit of from 17-18 to 21-22, it has been multiplied by 3x. It's almost like 300% the company has earned its increased its net profits. And then earning per share. So per share of for each share of the company, look at the earnings which is increased, which is in FY 17-18 is 9.78%. And then in FY 21-22 it is 29.78. Can you understand why this EPS is important? The EPS is important because to determine the market price of the share, we need to have the EPS is one of the component in EPS is one of the component in that formula, where market price of the share is equal to EPS into PE ratio of the company, profit earning capacity of the company. If we multiply that, then we can able to easily understand whether the stock price of the particular company is, and we can understand that the stock price of the company is whether it is overvalued or undervalued. So if you look at that EPS of the company, in FY 17-18, it was 9 rupees per share, but it has tremendously increased by increased to 29.78 rupees per share, which means that the company has almost increased its share value by 300% again. So everything is, in over a period of 5 years is 300%. The company has seen the growth, and then a similar way the company, out of that whatever the company earned 29 rupees, 29.78, the company has declared 15 rupees as a dividend. So whatever the share, EPS earned by the company, out of the 29.78 rupees, the company has given the 15 rupees for its investors as a dividend. So again, which is a very good payout ratio. And most important part is company does not have any debt. It is a debt free company. And if you can look at the company's financials, profit and loss account, you can see that the company has major expenditure of its salary. If you look at that, it has been gross profit margin of the company is 76%, and operating margin is, which we call is EBITDA. So it's only a 2% where the company has expenditure. So remaining is 74% is company the operating profit, and the net profit margin is after tax it is 56%, which is very high, which is very good number from the industry point of view and from the stock point of view. Yeah, if you look at the other ratios like growth ratios like 3 years sales, obviously if you can see that FY 19, yeah, if you can see that last 5 years numbers, the CAGR of the company has been CAGR is nothing but compounded annual growth rate, the growth rate. So this rate indicates that every year what is the it is a rate at which the company growing over a period of 3 years. So if you can see, it's a very good rate, which is the 67%, and 3 years of net profit, and again 65%. Nothing is below, nothing is less than 50%, 30%. Everything is above 50%. That is the amount of the growth. The company performance rate is almost above 50% in every element. Even if you look at that return ratios, return on net worth, return on net worth of the company is almost 28.4%. Return on capital employed is 35%. If you look at that, over a period of 5 years, again it is in very good shape. In trend line, it is in an increasing trend. Return on capital employed, it is also a very good percentage of 35.65%. If you can look, coming to a shareholding pattern, so the shareholding in the 20% of the promoter holding, that is BSC. Remaining like FII holds almost 8.65%, DIA holds 25.65%, and public hold 45% approximately. So if you look at that FII holdings, if you can see that the FII has increased its shareholding from 8.47% to 8.65%. Silently, the FIIs are increasing their shareholding in this stock. DIA holdings are also at an increasing stage. If you look at that 26.14%, they have reduced to 26.1%, but subsequently again they have raised it. Again they have reduced their stake, but holding of 25.64%, which is very good holding percentage from the investors' point of view. Coming to a technical analysis, so if you can look at the technical analysis, see when the stock was listed in 2017, nearby 2017-18. So the stock has touched almost like its high of 400 rupees. From there it has been corrected over a period of 2 years. It's almost like 61% is corrected from the high, from its high. So it doesn't mean that the company is corrected, means it is a process of the it is a process in the stock market that any stock which either it's a good stock or bad stock, or fundamentally good stock or bad stock, any stock has to go through the process of the correction, consolidation, and then the breakouts, breakdowns. So this is what we can see in the if you can take out any stock, you can see this kind of trends in that. It's only thing we need to confident about the company fundamentals. If the fundamentals of the if the fundamentals are the company, if the fundamentals of the company are good, then we no need to worry when we have invested for the long time. Definitely it will give you a very good return on the shares. So always when you want to look at always when you want to invest for the long term point of view, just look at the company's fundamental. If the company fundamental and the industry in which company is operating, and then how the macroeconomic factors are affecting to that industry, that also you need to take into consideration. Then you can reach to some extent then basis this analysis you can be able to form some sort of opinion basis that you can take your decision. No one in the stock market can be able to tell that after 1 year the stock price will go by 10% or 20%, after 3 years it will be reached to some thousand level, or nobody will able to predict that. Even everybody, nobody will be able to tell exactly what will going to happen after 1 year or 2 years in the stock market. The only thing which you can be able to protect yourself by thoroughly analyzing before the investing in the stock. If you invested in the fundamental stock company, then no need to worry, long term में पैसा पक्का बनेगा. So if you look at that, the stock has been coming corrected to 61% from its high, and then again it's consolidated during the COVID period. Then it has started the bullish rally. So if you can see that in 18 months, the company has given a 751% rally, which is like if you have invested 100 rupees, it would have become 751 rupees in a span of 18 months, that too in COVID period. So that is the power of stock market. And then that is the power of the fundamentally good company. So now again the stock has been corrected 62% from its high. Now, like basis this analysis, we can see now if you look at the as everyone says that the history repeats itself. Now you have seen that almost 61% correction in the past, and then there is a rally of 751%, and now the stock again corrected 62%. There might be chances that it may go further down or another 10 to 15% for the correction consolidation, but if not, then it can be bounced back from here, and again it can be able to give you a very good rally of 3 to 4. It can give you a very good rally from here. So you can see that if the previous high breaks, which act as a resistance now, if break, it can give you very high return in coming years. Now presently the overall view of this overall trend of this share from the technical point of view is bearish. Why I am saying it's bearish? Because currently the stock is being trading below its 200 exponential moving average and 50 days exponential moving. Anyone wants to enter into this stock, they need to always, it is good to buy above the 200 EM exponential moving average or 50 exponential moving average. Then the trend will be reversal. Then now the trend is bearish, but when we look at that RSI also in a consolidation phase, but MACD is giving the bullish signal here. So we need to wait and watch whether there is a possibility of trend reversal here. If it get trend reversal, then you can get into the you can take the entry if required, or you can hold the stock. If the trend reverse here, then it will definitely going to give you very good return on this in a span of 1 to 2 years. So coming to the total conclusion on the analysis. So we'll just discuss couple of the pros and cons in this of this discussion. So to summarize this, the conclusion, the pros are like the fundamentally strong company, duopoly in the industry, which means only two players are there, NSDL and CDSL. And then CDSL has 90% of the market share, and robust growth in revenue, which is almost like 52. We have seen any growth percentage, which is always, all growth percentages are almost like above 50%, and delivered good profit growth of 29% CAGR over the last 5 years. So it means that company, every year the company is achieving the profit growth of 29%, and dividend payout is almost 47%. ROI and ROC is very good, which is almost like 27-28%, which we have seen. Company is debt free, and MACD factor is a bullish signal. It's giving a bullish signal now. So these are the pros of the company. What is cons? The trading below 200 EMA and 50 EMA, RSI indicating is in a consolidation zone. So way forward, persons who already having the stock, who already enter into the stock, they continue to hold the stock if already has a position. No need to worry, because the company is fundamentally strong and monopoly. Definitely it will give you a return. No need to get panic and get out, book the losses. Buy in SIP mode. If anyone's enter into a stock market, if anyone's want to take the position, it is always in this fundamentally strong companies, you can invest in SIP mode. Wherever is a dip, you can go and put you can add your some stock to the some shares to whenever there is a dip in these companies, you just need to add some amount of shares into the portfolio. It will be a good opportunity. And then don't buy in huge quantity till the stock moves above 200 EMI. Seems trend reversal can happen soon, that MACD is giving you MACD giving the bullish signal, and very good stock for long term point of view. So this is we have done basis the last 5 years data, and then technical chart. Yeah. Disclaimer: this video is only for education purpose. Views expressed in this presentation purely personal in nature. Please do your own research before investing in the stock. Thank you. If you like the video, please like, share, subscribe, and do comment. Please provide your suggestions if any. Thank you.